Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for November 14th, 2011. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. After putting that substantial low one in the first week of October, we had a very strong rally, and we were suggesting over the last couple weeks that the market was overdue for a consolidation. We were observing particularly this 118 to 122 area marked by the blue box. That's an area that if the bulls were able to contain all the price action at or around those areas, that in fact this would end up just being one big flagging or wedge consolidation, leaving room for the S&P to actually bullishly break out for the remainder of the year to retest the highs of the year. This scenario continues to look like the scenario that will play out, even though we certainly cannot rule out the possibility that the market rolls over off of these overhead resistance levels and breaks down below the 121, 123 focal point. But really at this stage, the bulls have done everything they had to in terms of holding support lines, even in spite of all sorts of bad news, and reversing the market higher. So at this stage, we favor the scenario where the bulls will break this out. We marked off that 126, 127 zone that kind of not only was the lows back in June, but also the bulls have more or less had a hard time holding the market above that area. Any consolidation above the 126, 127 level on the spiders really does open that window for further upside follow through. Next year, I want to take a look at that ISE US Regional Banks Index, which is symbol JLO, and more or less the regional banks have also been consolidating for the last 2 weeks in sort of a horizontal triangle sideways, and more or less there's been very little conviction by the bulls or the bears. But so long as the bulls maintain and hold the support lines at the 19-1950 area, there's plenty of room for them to break it out for a retest even as high as the 22 to 2250 area over the upcoming month. Next year, I want to take a look at that ISE Syndex, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies, and really we have been going through the same pattern as we've seen on the S&P and so many of the other indices. Just it's been a consolidation in a downwards wedging formation, and so long as really this 118 to 123 area on the downside on the Syndex contains almost all the selling. Really at that juncture, there's plenty of room for the Syndex to bullishly break out and head for the highs of the year around that 140, 142 area. So really at this stage, we don't want to get too bullish too early, but it would be very positive if the bulls were able to get back to the 128 to 130 area and then push through it over the upcoming week. Next year, I want to take a look at that ISE Home Builders Index, which is symbol RUF, and the home builders have more or less been consolidating near the highs of the last month, and that is actually a very encouraging sign. The home builders have been a really depressed sector, and overall, the fact that there's now money flowing back into them is encouraging. Really, at this stage, any break above that 730 level with any conviction really does open the window for a move all the way back up to that 810 to 830 area up above, and so we'll be watching whether or not the bulls can make that push. We're not going to be bullish until the bulls have demonstrated their ability to hold the price action above that focal point. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. Similarly to the home builders, we've been seeing an ascending triangle pattern as the overhead resistance at this 120, 123 level sort of contained all the selling for the last 2 weeks. But all it needs is one good push by the bulls through this zone, and the window will open for that natural gas index to head right up to the highs of the year around 136 to 140. So at this juncture, we could be relatively optimistic, but we need further price action evidence to suggest that a breakout has actually started. Finally, I want to take a look at that ISE Mini FTSE 100 index, which is a symbol UKX, and the FTSE continues to consolidate along these 535 to 545 support lines at this juncture, just like the S&P 500. If it can roll up out of this flag and make another push right back toward that 565, 570, there's room for the FTSE to gun for the highs of the year going into December. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.